An algorithmic trading factor is not one magic line on a chart. Ours starts with enrichment. Raw bars are turned into market state features. Then a stack of lenses asks different questions. Enrichment aligns market bars with world state inputs, Fred macro and rates, storage, NOAA weather, or asset-specific data. Not exhaustive, not exclusive. Then OOS signs, rolling windows, nulls, baselines, and the stats battery ask if heat is more than noise. In this run, the scan covered 42 assets, 24 top feature candidates, 1,926 feature and horizon pairs, and 49,550 rolling observations. The stack is not only price action, it includes Hawk-style event pressure, tail and jump risk, topology for market shape, copula-style dependence, Wasserstein distance, volatility texture, and baseline checks. The important part is that predictive heat does not stay in one place forever. In this scan, 21 features were hot and rotating. 3 were hot and persistent. That rotation is the point. The factor stack is not only prediction. A risk layer sits above it. Volatility state, drawdown state, correlation, crowding, exposure limits, sizing, permission, and kill switches. A hot factor can still be blocked if the book risk is wrong. Finally, Ray number AI is trained on that enriched, aligned, risk-aware surface, not raw candles alone. The model is only one part. The custom training factor, diary, priors, rules, and postmortems tell it what to inspect. The formal anti-snoop layer is the stats battery. White-style reality checks, Hansen, SPA, Max-T, and Bonferroni-style multiple test controls, plus nulls and baselines. The point is to reduce the chance that we are only finding noise. But no academic battery proves forever. No testing is still live testing. It is just uncontrolled live testing with unknown error. We test first to reduce unknowns, then future bars decide. The public YouTube walk forward is the witness. This is not EMH versus adaptive markets. The result adds weight to both. Farmer is the bar. Easy public edges should be hard to keep. Grossman-Stiglitz is information cost. Lowe's adaptive markets hypothesis is the bridge. Heat can appear, decay, rotate, or vanish as the market ecology changes. That is the barcode idea. As the channel grows, we can reveal more of the method over time. More enrichment work, more stats battery notes, more postmortems, and more live evidence board updates. Not trade instructions. Research only, not financial advice. Capital is at risk.